McEachin and I today are filing legislation called the Trust in Lending Act, which you'll hear a little bit more about in a few minutes. But this is basically designed to address the problem that we have found with mortgage brokers as part of the mortgage crisis that we have faced with many borrowers who found themselves in subprime mortgages that they just could not afford when they could have qualified for prime mortgages. And part of that problem was the result of mortgage lenders who had steered those customers to the higher risk loan. Customers believe that a lender is going to protect their best interest, and today we're filing legislation that would actually put a duty on a mortgage broker to act in their borrower's best interest. And to talk a little bit more about that is Senator McClellan.
Good morning, and thank you, Jennifer. As Jennifer has said, we will be filing this legislation today. I think it's important to note, as I'm sure Helen will point out, that this doesn't affect banks, it doesn't affect mortgage lenders. This legislation is specific and focuses on mortgage brokers. Unfortunately, as in a lot of industries that we've found lately, there are a few bad actors that have spoiled the whole bunch, and that's certainly true in the mortgage brokerage industry. It's our hope that this legislation will pass. It's our hope that it will pass on a bipartisan basis, and that we'll truly be able to do something to make sure that as borrowers go to these mortgage brokers, that they can have the faith and confidence of knowing that they're looking out for their best interests and not simply trying to line their own pockets. And with that, I'm going to turn it over to Helen O'Byrne from Home.
Good morning. My name is Helen O'Byrne, and I'm the Director of the Center for Housing Leadership at Housing Opportunities Made Equal. Home works to achieve equal access to safe, decent, and affordable housing for all people. Through Home's nearly 4 decades of service, we have been able to successfully reach out to low-income and underserved communities across Virginia by offering a range of valuable counseling and educational opportunities. We've worked extensively with Virginia mortgage borrowers, both to prepare new homeowners as well as to help those in distress. These years of experience and observation have given us a very clear and dramatic picture of how the mortgage lending process works in Virginia. For most Virginians, when they shop for a mortgage to buy a home, they're squarely on the road to the American dream, but sadly for many it turns into a nightmare. Today we're here to discuss mortgage broker accountability in Virginia. Mortgage brokers have become an increasing presence in the mortgage origination market. According to the Mortgage Bankers Association, as of 2006, brokers were originating 45% of all mortgages, but 72% of all subprime mortgages. And as you all know, defective subprime products are the source of the wave of foreclosures drowning too many Virginian homeowners. Most consumers believe that mortgage brokers act in their best interest, and that brokers work to find borrowers the best loan for which they qualify. And indeed, many mortgage brokers do serve the interests of their borrowers, both professionally and responsibly. However, in the existing mortgage system, skewed financial incentives invite abuse and offer little recourse for borrowers who are harmed in the process. Under the current structure, brokers make a quick profit when the loan is closed and pass the loan to the lender, maintaining no long-term interest in the performance of the loan. The Trust in Lending Act would realign the interests of mortgage brokers with the interests of borrowers and increase mortgage broker accountability in Virginia. Through this bill, the Virginia Mortgage Lender and Broker Act would be amended to add specific enforceable duties by codifying a mortgage broker's duty to act in the borrower's best interest. This common sense legislation simply requires a mortgage broker to use their best judgment